Hey everyone, welcome back for another deep dive. Today we're heading over to Malawi,
Awesome.
a country brimming with potential, especially when you look at their mining sector.
Yeah.
And we're going to zero in on rare earth projects,
Uh-huh.
specifically this massive Cassia mine.
Right.
To really dig into this, we've got a whole stack of sources, articles about the Cassia mine and its connection with the Malawi Stock Exchange.
Interesting.
Explorations of Malawi's alternative capital market, details about mining exploration licenses,
Yeah.
and a really fascinating comparison between sovereign metals and Mkango resources.
Okay, that's good.
So, what we really want to do here is understand the intricacies of Malawi's mining investment scene. Why did certain investment routes get taken while others were kind of left behind?
Right.
Where's the real potential? And what's the impact of all of this on the people of Malawi, especially their economic future?
Right, yeah.
I think a really striking thing right off the bat is how differently Cassia's sovereign metals has performed in the stock market compared to Mkango resources. Cassia has had this incredible upward trajectory, while Mkango's journey has been a lot more bumpy. So it really makes you wonder, what are the fundamental reasons behind these two very different stories?
Yeah, for sure.
Okay, so let's dive into this. And maybe we start with the Cassia mine and the Malawi Stock Exchange. It seems kind of obvious that a major Malawian mining project would list on their own local exchange, right?
You would think so.
But what we're finding in our sources suggests that's not really the case. So why didn't that happen?
Well, I think it really highlights this interesting clash between how you actually get a huge mining operation up and running and the existing rules of the Malawi Stock Exchange. Our source, lays it out pretty clearly.
Yeah.
The MSE has this requirement, right? You got to show profitability for 2 years straight, consecutively, before you can even think about getting listed. But if you really think about setting up a mine, like all the exploring you got to do, the huge investments in infrastructure, and the fact that it takes a long time before you're even producing anything, it's kind of unrealistic to expect big profits in those first couple of years.
Yeah, for sure.
So there's this fundamental disconnect between how traditional stock exchanges work and the long-term, massively capital-intensive nature of mining.
I see.
Which basically ends up shutting out a lot of promising ventures, especially when they're just starting out.
That makes a lot of sense. It's not like you're just selling, widgets, right?
Right, exactly.
You're pulling resources out of the ground. It's a whole
Yeah.
different ballgame. And it wasn't just those early profits, right? The challenges around things like liquidity and getting foreign exchange on the MSE seem to have been a pretty big deterrent for those bigger mining investors as well, right?
Oh, yeah, absolutely. When we zoom out a little bit, it becomes clear that these big international mining investors want to be in markets where they can easily buy and sell shares. That's what liquidity boils down to. Now, the MSE being a smaller exchange, naturally there's just less trading activity going on compared to, say, a global giant like the London Stock Exchange.
Yeah.
And then you add in Malawi's history of issues with foreign currency availability.
Right.
Our source actually points out that investors might have to wait like a whole year
Wow.
just to convert their money back into foreign exchange.
That's crazy.
And for a big mining investor who's dealing with huge amounts of capital and needs things to move smoothly and predictably,
Yeah.
that level of uncertainty is a massive red flag.
So no wonder they started looking elsewhere.
Yeah.
And like the article mentions, this kind of set a precedent. Other mining companies saw this happening and followed suit, heading straight to the London Stock Exchange instead.
Right, exactly.
It's almost like a well-trodden path for them at this point.
Yeah, for sure.
Which then brings us to what the article calls a huge missed opportunity for Malawian investors. And this could even include things like pension funds. The ones managing the savings of everyday Malawians.
Right.
They were essentially kept from directly investing in what could potentially become a really valuable asset for Malawi right from the very beginning.
Yeah.
It feels like there's this real sense of lost potential for local wealth creation.
I think this goes to the core of the question about how a nation's natural resources actually translate into tangible benefits for its own people.
Yeah.
The article really hits on this emotional point. You have local investors,
Right.
including those pension funds that are meant to secure Malawians' futures, and you have this significant Malawian diaspora with a lot of financial power. And they were unable to directly participate in the potential growth and the value creation of the Cassia project in its early stages.
Right, yeah.
That means those potential returns and ownership benefits went largely to international investors.
Which isn't ideal, to say the least. But the article doesn't just leave us with the problems, right? It actually offers some potential solutions and policy recommendations. So for future projects, what really stood out to you?
I think the proposed changes have some real promise. Like the idea of mining companies offering corporate bonds and shares specifically aimed at Malawians, that's a really positive step.
Yeah.
This would create a direct path for local money, including those substantial remittances we mentioned, to flow into these crucial national assets. And the concept of dual listing is interesting too, being listed on both the MSE for local accessibility and a bigger international exchange like the LSE to attract those big investors.
Right, the best of both worlds.
Exactly. And then there's the idea of first rights for Malawians to buy shares in future mining deals before foreign investors even get a look in.
Oh, that's an interesting one.
Right. It's a powerful way to ensure that locals get to benefit from the very beginning.
Absolutely. It's like putting Malawians at the front of the line for these opportunities. That could really foster a strong sense of ownership.
For sure.
And ensure the benefits of their resources are actually felt within the country. So now let's shift gears a little bit and talk about taxes.
Okay.
And this whole timeline of when we might realistically see profits and therefore potential dividends from these big projects like Cassia.
Right.
Our source gives us some pretty valuable insights on this.
Yeah, it's really important to be realistic about financial returns, especially with these massive mining ventures.
Yeah.
Our source is very clear. Don't expect early dividends from projects that require the kind of upfront investment that Cassia does.
Right.
And it's not about companies trying to dodge their obligations. It's mostly a result of how tax laws are designed,
Yeah.
They recognize those huge initial expenses.
Oh, I see.
So under Malawi's Taxation Act and some specific investment incentive,
Yeah.
mining companies are actually allowed to carry forward their losses from the initial phases. And they can use these losses to offset future taxable income.
I see.
And then on top of that, the VAT Act lets mining exporters claim refunds on the VAT they've paid on goods and services.
So to be clear, these aren't loopholes or anything shady, right?
Exactly. These are legal frameworks put in place by the government.
Okay.
And the takeaway is, in those early years, it's super unlikely to see taxable profits.
Right.
Because those carried forward losses basically cancel out any income they make.
Makes sense.
Plus, the government is giving back VAT they've paid.
Oh, wow. So it's a double whammy in a way.
Yeah, exactly.
Okay, so the article really emphasizes that these massive initial investments, the money poured into exploration, infrastructure, and just getting the mine going, those costs need to be recouped before a company can even think about taxable profits, let alone dividends.
Right. It really highlights the long game that's being played with these mining investments.
Right. It's not a quick buck.
Oh.
Okay, that clarifies a lot about the financial realities of this. Now, let's get into the specifics of the Cassia project itself.
Okay.
And maybe we can compare it with another big Malawian mining venture, Mkango Resources.
Right.
They both ended up listing on the London Stock Exchange.
Mm-hmm.
But as we mentioned, their paths have been very different.
Yeah.
So what's the story there?
What's really interesting is this comparison between sovereign metals with their Cassia Rutile graphite project, which, remember, is the world's biggest known natural rutile deposit and the second largest flake graphite resource anywhere.
That's massive.
Right. And then you have Mkango Resources, who are focusing on the Songwe Hill rare earth element deposit. They both went for the LSE's AIM market.
AIM?
Yeah, it stands for Alternative Investment Market. It's where a lot of these growth-focused, sometimes higher-risk companies end up.
I see.
So knowing that AIM is meant for smaller, growing companies really helps us understand their investor profiles and why their share prices might jump around a bit more.
And speaking of share prices, their performance really reflects those different paths, doesn't it?
Totally.
Sovereign Metals, ticker symbol SVML, has seen its share price shoot up, like 83.8% over the last year.
Yeah.
It's currently trading around 43 pence.
Wow.
Giving them a market cap close to 265 million. What do you think has fueled this incredible growth?
Well, a lot of it comes from the constant stream of good news about their resource estimates.
Right.
It's basically confirming just how big and high quality the Cassia deposit is.
Yeah.
But the big game changer, I think, has been Rio Tinto getting involved.
Oh, right.
They started with a 15% stake in mid-2023, and now they've bumped it up to nearly 19.8%. This is huge. Having a global mining giant like Rio Tinto put that kind of faith and money behind Casilla.
It's like a stamp of approval almost.
Yeah, exactly.
It says a lot about the project's potential, and it brings in serious capital and expertise.
Definitely.
And the market has clearly loved it, seeing it as a way to reduce risk. Now, Mkango Resources, ticker MKA, their journey has been a bit more of a roller coaster.
Right, a little more volatile.
They peaked back in 2021, then pulled back quite a bit. But they've also had a nice rebound recently, like their stock price has doubled in the past year, trading around 10, 11 pence now in early 2025. So what's behind that more eventful story and their recent comeback?
I think Mkango's peak in 2021 was probably fueled by the general excitement around rare earth projects.
Yeah, makes sense.
Especially with their crucial role in all these new green technologies.
Right.
And then the pullback, well, that's not that unusual for companies that are still in the exploration phase.
Yeah.
You know, securing financing, permits, getting through those feasibility studies, it's a long, complicated process.
Right.
The rebound they've had lately seems to be because of some solid progress they've made. Most importantly, signing a mining development agreement with the Malawian government for their Song Hill project.
Okay.
Plus, positive news from their feasibility studies, which means they're getting closer to actually developing the mine.
It really does highlight how volatile things can be when you're investing in these exploration stage mining companies.
Yeah.
Our analysis shows they tend to have those big price swings compared to the more established mining companies that are already generating revenue.
Right, exactly. When you don't have that steady cash flow from operating mines, your valuation relies a lot on news about resource discoveries, milestones, and how the market feels about the specific commodities you're focused on.
Yeah.
Good news can send your stock price soaring, but any setbacks or a drop in market enthusiasm can hit you hard.
Right.
Sovereign's surge after Rio Tinto upped their investment is a perfect example of the potential upside, while Mkango's earlier pullback shows the risk that comes with this stage of development.
For sure.
Now, the bigger producers, they tend to have more stable stock performance, more closely tied to their actual earnings and the price of the commodities.
So when we're looking at companies like Sovereign and Mkango at this stage, those typical financial metrics, price to earnings or EBITDA, they probably aren't that useful, right?
Not really, no.
That makes sense.
For companies that aren't making revenue yet, like Sovereign and Mkango, which are still exploring and developing, reporting net losses and negative EBITDA, those traditional profitability metrics just don't give you a clear picture for valuation.
Right.
You can't even calculate a PE ratio if there aren't any earnings. And negative EBITDA kind of throws a wrench into the EBITDA calculation as well.
Right. So we need to look at other things then. What does the analysis suggest?
Well, it highlights the price-to-book ratio as a more relevant indicator here.
Okay, so price to book, what's that all about?
Right. So the price-to-book, or PB ratio, compares a company's market value, so basically their market capitalization, to the book value of its assets. It's basically saying, how much is the market willing to pay for every dollar of the company's assets? Now, for companies like these, where the future value of their underground resources is expected to be way more than their current earnings.
Which are zero right now.
Exactly.
Because they're not producing anything.
Right. The PB ratio can give you a sense of how much the market is betting on that future value. And right now, both Sovereign Metals and Mkango are trading at pretty high PB ratios.
Oh.
Sovereign's around 14 to 15 times.
Wow.
And Mkango's somewhere between 12 and 14 times.
That's pretty high.
Yeah. It's pretty typical for early-stage resource companies with promising discoveries to trade at those kinds of multiples. It's the market basically saying, we think this is going to be worth a lot in the future.
And what about their debt levels? It seems like both companies have mostly steered clear of taking on a lot of debt to fund things. Right?
Yeah, that's right. Both Sovereign and Mkango have really low, almost zero debt-to-equity ratios.
Okay.
They've mainly financed themselves by issuing equity, which means selling shares to investors. And for Sovereign, that big investment from Rio Tinto has been key.
Right.
It's pretty standard for exploration companies to rely on equity funding.
Yeah.
They don't have that steady income from actual operations yet to handle debt payments.
Right.
So having low debt means less financial risk in the short term. But it also means that current shareholders might see their ownership stake diluted when the companies need to raise more money down the line.
So it's a bit of a trade-off.
Exactly.
Okay, let's dive a little deeper into the strengths of the Casilla project itself.
Okay.
It's clearly a huge resource, being labeled a Tier 1 project. What does that actually mean in real-world terms?
So when we talk about a Tier 1 project in mining, we're usually talking about a resource that's both exceptionally large and high quality.
Yeah.
It's expected to be economically viable and have a long mine life.
Okay.
With Casilla, it's a massive 1.8 billion tons of ore.
Wow.
And the grades of both rutile and graphite are significant.
Yeah.
This scale suggests they could be mining there for well over 25 years, maybe even decades.
That's a long time.
Right. That sheer size gives them huge long-term potential and a real competitive advantage compared to smaller, shorter life deposits. It's like comparing a tiny artisanal mine with a massive industrial mining operation.
Right.
The kind that can support production and have a lasting economic impact for generations.
And of course, we can't overstate the importance of that partnership with Rio Tinto.
Yeah, that's key.
It's more than just the money they've invested.
Definitely. It's not just about the capital they've put in, which, don't get me wrong, is substantial.
Right.
But it's also their technical expertise in actually developing and operating mines,
Yeah.
their project management skills, and this level of credibility and market access that a smaller company like Sovereign would really struggle to get on their own.
Yeah. It's like they're bringing the big guns.
Right, exactly.
And as they increase their stake,
Yeah.
it shows just how confident they are in the project.
Yeah.
And the fact that Rio Tinto has this global reach and they're experts in marketing and selling titanium feedstocks.
Right.
That's got to be a huge help in securing those long-term offtake agreements for Casilla's production, right?
Absolutely. It's a major advantage. And luckily, the market outlook for both rutile and graphite looks really good.
Yeah.
Which is obviously great news for the long-term prospects of the Casilla project.
Definitely.
I mean, rutile is increasingly seen as this lower carbon option in the production of titanium dioxide pigment and titanium metal.
Yeah.
Which are used in so many things.
Yeah. Pretty much everywhere, right?
Yeah, from aerospace to paint, all sorts of industrial and consumer applications. And as industries globally are trying to be more sustainable with their materials,
Of course.
the high-grade natural rutile from Casilla could be in super high demand.
Yeah, that makes sense.
And graphite is a key component in the anodes of those lithium-ion batteries, the ones that power electric vehicles.
Right, the EV batteries.
Yeah, and that market is expected to grow like crazy in the coming years.
Yeah, for sure.
As the world shifts to cleaner transportation, so having both of these strategically important minerals in a single massive deposit really sets Casilla up well to benefit from these global trends.
It's like they're in the right place at the right time.
Totally.
And when you look at the location, Casilla also seems to have this advantage of being pretty close to existing infrastructure, which is often a make or break factor for mining projects.
Yeah, that's a major plus. It's in central Malawi, close to the capital, Lilongwe. And it's got access to the Nacala Rail Corridor, which connects directly to a deepwater port in Mozambique.
Okay.
So that significantly reduces logistical headaches and potential transport costs compared to projects in more remote, hard-to-reach areas.
Yeah, makes sense.
Plus, having existing power and water infrastructure nearby also helps streamline things and could even lower those initial capital expenses.
Okay, so this brings up a really interesting point from the analysis.
Yeah.
When you consider the sheer scale and the long-term potential of Casilla, and the fact that the initial capital needed, which is estimated at around $332 million,
Okay.
it's not an insignificant amount.
Right.
But it's not completely out of reach in the world of global mining finance.
Yeah. Could they have taken a more, like, Malawi-first approach?
Interesting.
Maybe involve the financial resources of the Malawian diaspora, domestic institutions like pension funds. Could that have enabled more local ownership from the get-go? The MSC article mentioned that diaspora remittances alone were around $300 million in 2021.
Wow.
It does kind of feel like there was this missed opportunity for Malawians to have a bigger, more direct stake.
It's a really thought-provoking question, and it points to this potential gap in how Malawi uses its own financial resources, both internal and external, for national development. Imagine if there were innovative financial tools or specific policies in place to effectively channel some of that diaspora capital.
Alongside strategic investments from Malawian pension funds and other local institutions into a project as important as Casilla.
Yeah.
I mean, Raising $332 million is still a big task, but the fact that the diaspora alone sent almost that much back in just 1 year...
It really makes you think.
It does. It strongly suggests they might have had the capacity if it had been organized and mobilized effectively.
Yeah.
It definitely highlights the need for creative ways to make sure Malawians benefit directly from the development of their resources.
Absolutely. It's about creating those avenues, those financial mechanisms that allow local capital to really participate.
Yeah.
And share in the potential wealth and long-term success of these vital national assets.
For sure.
Okay, let's circle back to Mkango Resources and the progress they've made.
Okay.
Specifically with those rare earth processing deals they've been working on in Europe and North America.
So Mkango has been actively pursuing this strategy of developing downstream processing for the rare earths they're pulling out of their Songwe Hill deposit. They've got an agreement to build a separation plant in Poland with Grupa Azoty, and they're also moving forward with a recycling plant in the United States, collaborating with Kotek.
And while that's great for Mkango, moving their project forward and finding a market for their products, it does make you think, right? Malawi's valuable raw materials are potentially being processed and turned into something more valuable somewhere else.
Right.
You can't help but wonder about Malawi's long-term goal of developing their own domestic value-added processing industries.
Yeah, you hit the nail on the head.
Right. To keep those economic benefits within the country.
While these international partnerships make sense for Mkango now, it gives them access to that specialized processing technology and those key global markets for rare earth elements.
Right.
It does raise the question of how much value ultimately stays in Malawi.
Exactly.
Ideally, as Malawi's mining sector gets more sophisticated, there'd be more and more opportunities and incentives to do more of that processing within the country itself, creating more skilled jobs, boosting tech development, and really maximizing the economic benefits from those natural resources.
Now, even though CASIA doesn't have immediate plans for downstream processing of rutile and graphite in Malawi, just the sheer size of the project suggests it could have this massive ripple effect on the Malawian economy, right?
Absolutely. A project as big as CASIA has the potential to generate huge economic benefits for Malawi.
Yeah.
It goes way beyond just the jobs created at the mine itself. Think about the infrastructure development that comes with it. Roads, power lines, water systems.
Right.
That benefits surrounding communities and can even unlock other economic activities in the region.
Yeah, for sure.
Now, our sources don't get into specifics about what kind of downstream industries might pop up because of CASIA in the near future, but when you have a mining operation of this scale around for the long haul, it often acts as this catalyst. It encourages the development of supporting industries, services, and just overall economic growth in the area.
So stepping back and looking at the bigger picture of mining exploration in Malawi.
Yeah.
Our source on that topic pointed out that Malawi has mainly been granting exploration licenses so far, not full-blown mining licenses.
Right.
What's the significance of that?
That's a really strategic move by the government.
Okay.
By sticking to exploration licenses at this stage, they hold on to a lot of bargaining power for when those mining licenses are negotiated.
I see.
It allows them to thoroughly evaluate the resources, how viable they are, how big they are, and then they can set the terms and conditions for actual mining operations. Potentially getting a much better deal for the country, making sure they get a fair return on their assets.
And we also came across this information about Mali's alternative capital market.
Oh, right.
It doesn't seem like it's become this big hub for major startup listings yet, though.
Yeah, it's there, but it hasn't really taken off in a big way for those kinds of companies, which suggests it's maybe still in its early stages. Might not have the size, the liquidity, or the investor base to really support larger or more mature ventures yet.
So let's pull all of this together as we wrap things up here.
Yeah.
We talked about why CASIA didn't end up on the Malawi Stock Exchange, the very different journeys of Mkango and sovereign metals in the market, the huge long-term potential of CASIA, Mkango's efforts to develop their rare earth project with their eyes on processing abroad, and really importantly, the idea of structuring future resource deals to prioritize Malawian investment and ownership.
For sure.
I think the idea of a missed opportunity for Malawian investors, particularly in those early stages of a project as huge and potentially impactful as CASIA, is something that really sticks with you.
It's a big takeaway for sure. It makes you think hard about the long-term strategies.
Yeah.
How can Malawi really use its natural resources to deliver real, lasting benefits to its people and build a stronger future?
And that brings us to our final thought for you all to ponder. Given the wealth of natural resources in Malawi and the financial power of its diaspora and its institutions, what kind of innovative financial tools, policy changes, or collaborative structures could we put in place to unlock local ownership?
Yeah.
To ensure that Malawians benefit directly and significantly from these large-scale development projects?
That's an important question.
It is. How can Malawi make sure its own people are the primary stakeholders in the development of their nation's wealth? That's a crucial vision for the future, something for everyone to consider.
For sure.
Thanks for joining us in this deep dive.
Thanks, everyone.
We'll see you next time.